It's getting more difficult these days to find affordable housing, especially in desirable areas such as Boston. And that's why it's so important to have programs that help the state's first-time home buyers. But a leading program was recently dealt a setback with the loss of participation by one of the country's biggest lenders, Bank of America. A report on the change was done by a home buyers organization based in Dorchester, the Massachusetts Affordable Housing Alliance, or MAHA. We'd like to welcome as our guest from MAHA, a board member, Thadine Brown, and community organizer Cortina Vann. Thank you very much for being with us.
Thank you for having me. Thank you for having us.
I want to start with Cortina Vann. The program you're using right now, I think it's called One Mortgage, and there were predecessors going back to the soft second mortgage. So take us behind all these labels here, and how did these programs get started, and why?
Well, back in 1989, the Federal Reserve had done a report, and it basically established that there was inequality of lending going on in the various neighborhoods of the city of Boston. There weren't affordable mortgage products over 20 years ago, and from that report, people in the community, folks from MAHA, Mass Housing Partnership, which is a quasi-government agency, and with lenders, came together to create the soft second mortgage program over 23 years ago. Because there weren't affordable mortgages at that time, people were financially able, they were of lower income, needed a program that was of a lower down payment. And to rectify the issue of inequality of lending, that's how the program was started, and people in the community were at the table to help create the program.
No, I think if I recall from that research in those days, there was a disproportionate percentage of people of color who were turned down, even though they were probably bankable buyers.
Correct. And that's what was shown in the Federal Reserve report back in 1989, where you had large numbers of people of color in the city who were bankable, qualified, had the credit scores, had the savings, but were not able to get a mortgage. And so with the reporting that was done that solidified the evidence of inequality of lending, the soft second was created because the lenders weren't meeting the needs of people in the community. And so the CRA, the Community Reinvestment Act, was something that the community groups MAHA had utilized. Basically, banks have an affirmative obligation to meet the credit needs. Regardless of your income or where you live, you just have to be bankable and qualify, but they need to meet the credit needs of all communities throughout our state.
Thadine Brown, talk about your home buying experience and why MAHA was so important here with this program.
Sure. So I love the work that MAHA had done, and they, helped me when I had my class, my pre-purchase class and post-purchase class, and I love the community organizing that they did. They, opened my eyes to how important to be involved in the community, and it helped. They helped me to see the changes of being able to buy my home. So I've helped with community organizing. I've joined the board to help out with a lot of work that they've done, and I bought my home. I'm a first-time home buyer in Hyde Park, and I was able to buy my home 5.5 years ago. And owning my home was very important. It has opened the doors for me and my daughter. I save a lot of money through this affordable mortgage. I can invest in my daughter's education, give her a lot of allow her to join into a lot of extracurricular activities. So MAHA opening my eyes to this mortgage program has really been great for me and my daughter.
What I read between the lines here is that if you didn't have the kind of help from this program, then you might have had to live, maybe not even be able to buy in some other community, maybe where prospects were not as good.
Exactly. Because with these mortgages, with this low and affordable mortgage, it allows you to develop in other, move into other communities, and that's important. So the soft second program has offered low income families to be able to move into other neighborhoods throughout Massachusetts.
And I guess you're lucky because you own the home and you're not worried about the next rent increase.
No, I'm not. I have a fixed mortgage that I can pay for the next 30 years. So right now I'm focused on my daughter's education and her for college, and I know that I can afford that, and I know I can afford to stay in my home without worry about having a foreclosure. And it's important for a lot of low to moderate income families in the city of Boston to be able to have this opportunity like myself. And it's important that a program like this, this mortgage program, stays around.
Cortina, I know this program has changed as regulations have changed over the years, but I guess the basic principles here is that you find a way to reduce the costs for homeowners and also to reduce the risk for the lenders.
Right. So, you know, part of the affordability with the program for low and moderate income families is that you have the low down payment. You're looking at something like 3% for singles and condos, and multi, like when you talk about a 3-decker, you're talking about 5. But and then part of the dynamic, as Thadine had mentioned, it's fixed interest rate for the life of the loan unless the person refinances out of it. And then for your one soft second, as we passionately call it, a soft second, which is now the one, you don't pay private mortgage insurance. And there's a little bit of an investment from the state in the program, so that helps with the banks as far as them having that insurance there. And there's a stake from the state being part of that, and that affordability and the interest rate discount that is there. It's a lower interest rate compared to other products, gives you that affordability and being the most affordable first-time homebuyer mortgage program.
Now, of course, your report's mainly about Bank of America here. They have decided to cut themselves out of this program, but they say that, hey, we're serving a lot of customers, low and moderate income, so don't blame us.
Part of that dynamic with Bank of America, they've been a participant over the history of the program with the predecessors when you had Shawmut and when you had the Fleet merger. They've been a participant in the process of being a lender that provided low and moderate income families with the mortgage of providing the soft second. So they were helping to fill this gap that we have. We still currently have a gap of percentage of homeowners where you have 69% of white households and 32% people of color. And so they've dropped out of the program, not realizing that they have been essentially a part of the process, but walking away from this now doesn't help fulfill the current gap we have. We've been working with them for a duration of time. They've been a great partner over the years. And we would like to see them participate going forward because Bank of America has a very large network. They cover wide spans of branches across the state. And even though they may say we provide low and moderate income families, say, I think maybe we were talking about 38%, almost 40%.
So they say they do better in this program than from the products where Bank of America.
Right, they've done better with the one program, and we'd like to see them continue that so they can help to fill that gap. But if they pull out, you can't service the number of families throughout our state.
Which is unfortunate.
It's very unfortunate. And I think, you know, for the MAHA members that I work for, being part of the organizing staff, I work for our MAHA members, my neighbors, we see Bank of America everywhere. So why pull out? They take deposits. They make about $58 billion in deposits from us here in Massachusetts. Why not reinvest that? We're investing, and they have over $58 billion in deposits. Bank of America definitely do the program. They've shown that they can do it. They've done it.
Right. They've done over 7,000 loans.
Which is fantastic.
Loans, right, through the soft second program.
And I think about loans, that's 7,000 families.
Yes.
And these loans have performed very well percentage-wise. Thank you both very much, Cortina Vann and Thadine Brown.
Thank you.
Thank you.
From MAHA, we'll have more news in just a moment.